It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to the Real Estate Breakfast, and a very busy week this one. Last week, super slow. This week has been crazy for us. Notice that you never strike that balance of something in the middle. The reason you don't is it doesn't exist. It is a Thursday, that does exist, and so does August the 14th. Now, Domain's latest profit and loss report, that is out today, and it tells us that 97% of house resales in the first half of 2025 made, that's a question for you. If I was to say, how much is that median price, would you be surprised to hear that it is $365,000 for houses? And if you look at Sydney, the median is $700,000. We're talking about the first half of this year. And 88% of unit resales nationwide delivered a profit of $202,000, the highest proportion in almost 2 decades for houses and the strongest results for units in 3 years. So rising prices and longer ownership periods, those two conflated together are combining to deliver substantial equity gains across most major cities. While a few capitals remain in recovery mode, markets such as Perth and Adelaide are seeing some standout annual profit growth. So as I mentioned, this is brand new out from Domain. So let's catch up with Nicola Powell, who is the Chief of Research and Economics from Domain in Sydney. Good morning to you, Nicola. Welcome to the Real Estate Breakfast. We have had a very interesting week with people breathing easier with that 25 basis points drop. First thing to sort of get a comment out of you this morning. Hallelujah for that.
Absolutely. It's been the week of weeks, I think, for the housing market. And I think that rate cut, we expected it in their last board meeting. They surprised us, but they have delivered it this week. So, this obviously helps borrowing capacities. It helps anybody that's got a current mortgage. If you look at the household income of $100,000, those 3 rate cuts that we've seen from the RBA this year means that borrowing capacities have increased by $35,000 now compared to the beginning of the year. So that is probably going to be a bit of a step change as well for momentum in our housing markets.
Yeah, it was interesting with some of the commentators because they were sort of forecasting, they were being a little bit novel with the reduction. They were saying they thought it might be a 35 basis points drop. And when they were saying that, I thought, no, the governor's not going to do that. Why would she do that if she can make it 25 now and then the next one 25? It sort of takes 35 is just not in the lane, I don't think.
I don't think either. And I think it's been very clear that the RBA are on a rate easing cycle that is a cautious one. What that means is they're not going to be delivering big reductions in the cash rate. I don't think we're going to be seeing that 50 basis points. We're also not going to be seeing back-to-back rate reductions. The market is still pricing in more rate cuts over, the next 6 to 9 months. We're expecting another one to be delivered in November, and there is already 2 being priced in for early next year. So we are going to see more rate cuts coming through from the RBA. The RBA are still going to be cautious in their nature to not overstimulate our housing markets and the economy overall.
Now, this profit and loss report, as I mentioned in the setup, I don't think most people would pick that price, that house median price across the country in the first half of this year at $365,000. That is an awful lot. Yes, of course, you've got the super, super expensive properties, especially there in Sydney, that is pushing along that median price. But then you look at Sydney itself and that median, $700,000, the equity gains for people, life-changing.
It's extreme. This really creates that wealth effect. It really showcases that owning property, transacting property really does help to build financial wealth for your family and intergenerational wealth. These figures are extreme. It's been driven by two main factors, and that is rising property prices. We have seen momentum coming back into our housing markets. We've seen price growth across all of our capital cities over the last 5 years. But the other aspect is we are staying in our homes for longer periods of time. And what that allows homeowners to do is it gives owners more opportunity to build equity and then realise those capital gains. But, as you said, this is hundreds of thousands of dollars being made on the property when it goes to being resold. And, we're talking about median profits. So there's going to be a massive chunk of Australians that have been achieving much higher than this median gain.
Very, very hard to save up $365,000 in 6 months. That is for sure, let alone the $700,000. As far as the houses are concerned, you guys have reported this is the highest proportion in almost 2 decades for houses. I mean, that's quite something in itself.
It absolutely is. So it's just under 97% of houses that were sold over the first 6 months of this year resold for a profit. So it means that homeowners are walking away with money gained. Very small proportion of sales are occurring at a loss. It's roughly about 3% of sales nationally. So what it really tells us is loss-making resales in the property market are very rare. And I suspect the loss-making ones are really driven by people that are owning their home for a short period of time. Perhaps personal circumstances change, or they've paid over the odds when they actually bought the property. We know in the property market, it's all about buying well, but it's also all about selling well too.
Yeah, and when it comes to units, yes, we know that the units are not going to generate as much, but still, the units, that is a strong performance for 3 years. It is the strongest result for units in 3 years. So, for anybody that's sort of bought these units and been thinking, well, it's not a house, the gain has been there. Yes, it's fair to say there are a lot of units that have sort of just remained the same. Some have gone backwards this year, but for many, it has proved to be a very prudent investment.
Absolutely. And I think this was one of the figures that I was quite surprised about, pleasantly surprised, I should say. And that is the fact that the profit, the median gain on a unit resale nationally was $202,000. That was probably higher than I expected. And when you look at the median gain and the change, that has increased just over 15% over the past year. Whereas when you look at that figure for houses, that's increased 10% over the past year. So the median profit being made on a unit in Australia has seen a larger uplift than houses. And that aspect surprised me. I think it does depend probably on the location. Some of those locations, so for example, Brisbane has seen one of the biggest changes in median gain, as well as Perth. And that really does align to some extreme rates of price growth that we've seen coming out of these markets. It's really being led by Brisbane, Adelaide and Perth in terms of that gain. But yeah, again, hundreds of thousands of dollars. But I would say with the unit market, goes back to that statement I made about it's about purchasing well as well as selling well, and it's buying the right type of unit. We have a larger proportion nationally of units selling for a loss. It's just over 1 in 10 units are selling at a loss, so it's about 12% nationally, and that median loss is sitting at $46,000. So I do think it is crucial to be buying the right unit, the right apartment in the right location to really set yourself up for that capital growth.
Yeah, no doubt about it. And we should have a look at a weak spot in your report, and we've got to go to Darwin for that.
Darwin is one of those weaker markets. So for units, for example, about 53% sold at a profit, which means you've almost got half of units actually selling at a loss. And even when you look at houses in Darwin, 84% sold for a profit for houses, but that means you've got about 16% selling at a loss. And that's the largest out of all of our major capital cities. So I think this reflects the more volatile environment that we've got across Darwin's housing market. We haven't seen price growth in Darwin compared to other capital cities. And it is a much more volatile property market overall.
And just sticking with the units, Perth's profits, I think you mentioned 55.5%. Brisbane rose 40.4%. This is the units that we're looking at. and Adelaide gained 37.4% year on year. Then you go to something like a Melbourne, 73%. That's pretty impressive.
Yeah, so I mean, the change in median gain has been really led by Brisbane, Adelaide and Perth. You know, we've got hundreds of thousands of dollars being made, the median gain on a unit resale. Melbourne's been that interesting one. Melbourne, we know, has been a more subdued property market. 73% of houses sold for a profit, whereas in Brisbane, Adelaide and Perth, you've got well over 90%, 99% of units in Brisbane, for example, made a profit. But actually, the gain in Melbourne has fallen over the last year. So profit margins are deteriorating in Melbourne. But the one thing I would pick, though, for Melbourne is we're starting to see this housing market turn around. And that means the future prospects will be growing for making a profit in a market like Melbourne, because we've seen a stark change and a stark turnaround in market conditions coming out of Melbourne.
Now, if you own a unit and you are in a regional area, your report has picked up that regionally unit sellers performed better than their capital city counterparts. I just want to run over that number with a 95.7% selling at a profit versus 85.6% in capital. So the regions with property still going pretty great guns.
Absolutely. And I think this really showcases it's all about those lifestyle locations, those sea and tree shade locations, which we know are highly desirable. And I think those regional units have really been held up. I suspect it's being driven by those tree and sea change locations. But technically speaking, when you're doing a comparison between regionals and capitals, we see more units making a profit in regional Australia, and the profit is actually higher when you compare it directly to the combined capitals. So look, there's probably another surprise for listeners out there.
Yes, indeed. And if you're in Brisbane, I'll just give you that number again. Median house gain for the first half of 2025, 480 grand. 430 grand for Adelaide and 339 grand for Perth. Nicola, there is so much to sort of dive into there, but we'll have to wrap that up. You are going to have a busy time with media today talking about all of these numbers, and good luck with all of that, and thanks for coming on to the Real Estate Breakfast again this morning and sharing all of that with our listeners.
Great to be on. Thanks for having me.
If you're a new listener, welcome. We talk to the most knowledgeable real estate experts across Australia every day from 6 a.m.
It does feel as though buyers out there are feeling a bit of a pinch and an urgency, which was kind of void in 2024 and is certainly resurgent now, which is, I think, why we're seeing some of these suburbs see big uplift in pricing.
These price increases in the double bays, in the Coogis, etc., they are going to affect the outer suburbs. And I just wonder whether people should be looking at some of these outer suburbs for growth.
Well, I think it's a logical move, right? Because ultimately, not everyone can live within the eastern suburbs. And I think with the change in zoning, we are going to see more density in the east. Buyers that are ultimately looking to buy kind of in Bellevue Hill, Rose Bay, Coogee, Tamarama get pushed out. And so therefore, long term, that has an impact on some of the suburbs that are kind of on the fringe of the eastern suburbs. They will, by virtue, have price increases.
If you look at the per square metre rate, gee, it's up there, 94 grand.
Look, it's funny because $1 per square metre is always higher with smaller properties than with larger properties. And it's the same with land size. You know, in a suburb where you'll have a very small property. And of course, in Darling Point is, you know, one of Sydney's or one of the country's most exclusive locations. Whether you call it a mansion, I'm not sure. It's more likely wedged between two mansions. It's very skinny. They've made the most out of it, I have to say.
We connect you to the best real estate information across Australia. The Real Estate Podcast.